Hey, good afternoon, everyone. Brian Hoops here, Midwest Market Solutions. This is our closing market insider TV commentary crop report day, Thursday, the 8th of February. Looking at some of the numbers here, and then we're going to move into a couple charts that we want to show you that has some interesting items as well. So, all right, we are looking at, this is the ending stocks here for corn and soybeans and for wheat. Corn at 2.352 billion bushels, well below the average trade guess by 100 million bushels, and down about 125 million from last month. This is a big adjustment from 1 month ago, and it comes because of an increase in export activity by 125 million bushels. That is a pretty substantial jump for 1 month, and doesn't give us a lot of room for improvement in future months. I'm a little surprised USDA would cut ending stocks that much in 1 month and increase exports that same amount. Now, you look at last year's stocks, we're still larger than last year, and that gets key as we go into the growing season. And even though with 1 million acres less, you're looking at 170 million bushels off of this number potentially. So if you have a similar type growing season, we're going to look at ending stocks around 2.35 billion bushels for next fall again. So it's a huge number, burdensome number, but it is what it is. We're at these price levels, and if we can get December moving above $4, there's going to be some marketing opportunities. Soybeans were 530 million bushels, 230 million more than a year ago. And if we plant another 1 million acres, it really limits our upside potential. We did not have soybeans rally much above the $10 mark last year, very little time above it. We're above $10 on the November beans right now, so there's going to be some marketing opportunities. We're going to have to take advantage of them, I think. Otherwise, where are our stocks going to be if you add another good growing season on top of this? You add another 100 million bushels, or not 100 million, but another million acres being planted at 50 bushel an acre. You're adding more tonnage to this, and it just depends on how big a crop you grow. You may get this closer to 600 million. We could be talking about a year from now. So definitely want to be doing something on the beans, I think. Ignore the price action today. And look at the longer term fundamentals. Wheat stocks down harder than what they should have been. 20 million bushel increase here in stocks, but you got above the 1 billion bushel level. Psychologically, that's negative. Last year, we're still down a long ways compared to a year ago, and that is the only market you can say, corn, beans, or wheat, that we would be lower than. As far as world production numbers, 95 million metric tons of corn in Brazil, above the average trade guess, unchanged from last month. Soybean crop bigger than a month ago and a little bit larger than trade guesses. The Argentine corn crop down 3 million metric tons and even below the trade estimate. Soybeans down from last month, a little bit above the average trade guess here. So nothing really that's shocking in these world production numbers. Pretty much as expected. Let's look at a couple charts here and we'll wrap up. Look first at the soybean market. As we did have an outside day higher close, we fell to support right after the reports release as was deemed a little bearish. Then we started to rally and we poked our head above this area, 996. Going to run into a lot of resistance around 1002 in the soybean market. This area here, this bar, represents key support. Now that we've made this high and haven't taken out these highs, if we start taking out this low, we're going to drop as we're going to be in a short-term downtrend. A market, very similar chart pattern. Look at the crude oil. Here you had a high. You did not make new highs. You took out a support area, and prices have fallen. We're getting a lot of fund liquidation in here at very lofty levels. You don't want that to happen to the soybean market. In the corn, you did make a new move and a new high. You take this corn chart, we went to 67 3/4 all the way back to here on October 25th. Same price. We reversed down. We're going to run into resistance in here in a couple cents higher. 370. Every couple cents you've got resistance in this corn market, and you got a lot of producers selling. Also, you don't want to take out this low. Same low as the soybeans, February the 6th. Take that out. Things are going to get ugly in a hurry. And finally, in the wheat, outside day lower in wheat. Did pair up losses a little bit by the close. Livestock trade was volatile as well. big outside day. We had a $2 rally at midday, gave it all back, closed a little bit off of our lows. You can see this little uptrend line I've drawn here on this chart. We really need to hold this, and you don't want to take out this cluster of lows back in here and start dropping this market either. Seasonally, we're working our way higher in the cattle. Hog market held support where it had to, absolutely had to hold this low. We did, we bounced. We're oversold. We need to come up back up to the $72 area. I think that's very likely. And a lot of people asking about the stock market. Here's a chart of the mini Dow. Well, it's not updated for today. Here's an S&P chart. Big drop, again, 71 point losses. Did not take out these lows, but we are down hard in today's session. Have a great night, and I hope you had a great day of trade. This has been Brian Hoops.